I just wanted to jump in here early this morning and let you know that ASML had their earnings report yesterday morning. And in light of the DeepSeek and all this, I think it's really important because ASML is the starting point of everything that has to do with semiconductors and data centers and everything else, because they make the $2 billion machine, which actually is probably a low price on it, that makes everything that's relevant to semiconductors happen. It starts with ASML. They came out with a tremendous earnings report. They indicated that their gross sales were up 51%. Quarter over quarter this last year, and with those sales at 900 or 9.3 billion euros, and that was driven by the sale of two machines and some upgrades. And again, they're maintaining their gross margins at about 51% and their net margins about 26%. I follow this like I follow 61 stocks in the semiconductor AI industry stratosphere, if you will. And I think it's important to understand what the companies do and how their numbers project what their price is going to be, not so much today, but 3 years from now. And that's what I'm interested in. What is their price going to be 3 years from now? And let me give you just a brief overlook of how I do it and where you'll find it. It's on my website, Best of Us Investors. And as you can see, here's ASML. What I first do is find out, based on their earnings report, which we just had, I review them. They are projecting they're going to grow their earnings per share over the next 3 years at an average of 20.33%. They have a PE ratio of 28.8. Dividing this into this, we come up with 1.39, and that tells us what its PEG ratio is, and its PEG ratio is reflective of its fair value. A PE ratio says, or a PEG ratio of 1 says this stock is fairly priced. So as you can see, we see some up here in the 2s, the 4s. We'll get some up here in as high as 10. So ASML is relatively fairly priced. Then what I want to do is say, okay, if in fact their stock price grows in tandem with their earnings per share growth of 23% or 20% over the next 3 years, what's their price going to be in 2027 with a similar growth? Well, today their price is 709. If the share price grows in accordance with the earnings per share price, the price at the end of 2027 will be $1,234.35. That makes it the 15th best stock that I have that I'm following. So that's what I do. Then I say, okay, if its PEG ratio is 1 and its earnings per share and are 25, what's the price going to be in 2027, the end of 20, that's $887. Then what I do is say, well, what's the fair price today based on those metrics? And it says actually the fair price today would be $880. Then I ask, what does Wall Street say the price is going to be? And as it is, as a result of this earnings report that they put out this morning, Goldman Sachs came out and said that they believe the price is going to be $1,052.29 within the next year to 18 months. So that's where I come up with it's selling at about a 48% discount today based on what Goldman Sachs says it's going to be around the end of this year. That's how I come up with that. And then the next step I go to is, and I say, what is the earnings per share based on their latest earnings call? What is it going to be in 2028? And they say it's going to be $41 earnings per share, 96 cents. And if I multiply that times 25, which is the PE ratio for the S&P 500 over the last 25 years, that tells me on December the 1st or January the 1st of 2028, the stock is going to be selling for $1,049, which puts it at something of a 68% discount or growth potential. And I like that. So that's why I own the stock. It's one of my largest holdings. So then as a service to you and as a service to me. What I want to do then is use AI to my advantage to understand everything I can about the earnings call that just occurred, of what the analysts are projecting, of all the data that is out there on the internet. As of this morning, what can I learn about ASML? So I use my agent to go find me all the pertinent data and then create a podcast for me that tells me what exactly is happening with ASML. And as you can see, if I put my cursor over it, it leads me to a link where I have about a 21-minute podcast that was composed by my AI agent to tell me exactly what's happening today and what the predictions are based on the current data as of today. And as you can see, there is the date that I entered it. Now, what I also want is not only that podcast, but I want a written document that gives me the same basic information so I can break it down in front of me, and that's what that is. That's a link to this document so that when my subscribers come, they can see the metrics that I just took you through as to how I think ASML price is going to project over the next 3 years. This is an interesting number. I operate under the premise that in order for a company to grow, two things have to happen. Number one, they have to increase their capex. They're going to have to invest in people and equipment. So their capex is going to go up. That usually is sometimes reflected if they're cash rich. You just see the capex going up as an expense, or if they need money, they go out and borrow money. But the other real tell, and that's why I call this a tell sheet, is they have to hire people if they're going to upscale their operation. So as I said, they sold 2 machines this last quarter. If they're going to sell 3 this next quarter, they got to hire people. So what I do is I go to their balance sheet and say, are they increasing their workforce? And in fact, over the last 3 years, as you can see here, it's a 3-year employee growth. They've increased their employees by 59%. That tells me this is a growing company. Well, what do I want to invest in? A growing company that has gross margins of 57% and net 51.3% and net margins of 26.4%. So not only is they're hiring more employees, but they're maintaining their margins and they're growing their company. So what is the natural conclusion that's going to happen? Well, if all that is growing, so is their stock price. And that's why I invest in stocks. I don't know why you invest in stocks, but I put my money where I think it will grow most effectively. And as a result of, and this is an interesting thing, their CEO in their earnings call was asked about what is the effect of this deep seek on the future of the company. And his comment was, the cheaper AI is, the cheaper it will cost to use it. The cheaper it is to cost to use it, the more people will demand it. And that means I'll need to make more machines. So he sees the DeepSeek thing, which has given us an opportunity to buy the most important stocks in our future at a cheaper price because the panic hit relative to it. And the market really doesn't understand. So now, as I did a video and I showed a explosion of H-bomb over Silicon Valley, well, the fact is it's the best thing that could have happened to the AI revolution, to the data center revolution, and thus today is the best day that you can buy AI stocks, and I think one of them that you really need to consider is ASML. So that's what I do. That's how I do it. If you want access to it, you just come to our website, bestofusinvestors.com. You pay me for $19.95 a month, and I'll give you this kind of analysis, this kind of deep dive, this kind of briefing. And these briefings, as you'll see, they pop up as the companies have. This is a new feature, is what I'm saying. I added the deep dives about 60 days ago. I'm just now adding the briefings because some of my tribe, my subscribers, said I'd like a written document as well as the verbal podcast so that I can study it in more detail. Because truly, if you want to be a good investor, the first thing you have to do is know what you're buying. And then from that, the second thing you have to do is understand the financials, because the reality is this is not about putting money in companies that some face on YouTube tells you is good, or somebody on Squawk Box or Fox Business or whatever. No, the key is to understand how they make money, if they're going to make money in the future, and how does their growth compare to the other companies that you have, the other 6,500 companies that you have available to you. I believe the growth potential of my portfolio is best represented in the digital and the AI revolution that is going to change my world. Okay, so if you want a part of this, I don't want you to get into it and say, "Oh, that's not a good." Come for 14 days. You'll find through the link in the description a 14-day free trial, so you can become familiar with it. And then after 14 days, you say, "No, this is not what I thought it was. This is not. This isn't not the newsletter that I want to receive every day or every week, and I got to figure it all out and just trust somebody." No, what I want you to do is learn how to do it yourself. I'm 80 years old. I'm not going to be here forever. So you need to learn how to do it for yourself so you can make an informed investment decisions, not depend on somebody else. I'll talk to you again about this in the future because I think it's important.